A new report says Jared Kushner, President Trump's son-in-law and senior advisor, paid little to nothing in federal income taxes for years. The New York Times reviewed documents from Kushner's business dealings and found that by using a tactic well known to real estate investors, Kushner seems to have avoided paying federal taxes on large sums of income from 2009 to 2016. The kicker is that all of this is completely legal and within the bounds of tax laws on the books. Confirming this fact, a spokesman for Kushner's lawyer told the Times that Kushner paid all taxes due. Joining me now, New York Times reporter Emily Flitter, who broke the story. And Emily, your story doesn't dispute the fact that he paid all taxes due. It's not about tax avoidance in the way some people think about it. This was legal.
Right. It's not like he didn't write the check that he was supposed to write. It's just that his accountants made sure that he didn't have to write a check.
Is that because he's got particularly good accountants, or because the law is designed for the kind of money that Jared Kushner in his property business makes?
Well, it's both. He has enough money to hire really good accountants who can use the tax code to zero out his liability using deductions that are only available to big businesses and especially potent for real estate developers.
Now, there's nothing that's been done. We've had the first tax rewrite, major tax rewrite in a long time happen, and nothing was done to curtail these types of loopholes that allow somebody who's actually making money to not pay federal taxes.
Sure. I mean, the tax code, the tax overhaul changed a lot, and there were things that got eliminated, but for real estate, the net outcome of all of these changes was positive, and real estate was the only industry where the depreciation deduction was preserved the way it was. So the Kushners really lucked out. What
is the argument for keeping a depreciation deduction like this for real estate, where a guy like Jared Kushner and his companies can pay no tax?
Well, if you're a developer and you buy a building, you can say, look, it's just like if you were to buy a car and drive it off the lot new. As soon as you drive it off the lot, it's not worth the same amount of money. But we all know that in New York and in the surrounding areas, chances are if you buy a building, its value is going up.
So the idea that you can depreciate it this way. The Kushner companies did not dispute to us the conclusion that your reporting came to. Did they take issue with it at all?
Their comment to us was that they felt like what we saw, which was not Jared Kushner's actual tax returns, but rather a summary of his finances, was incomplete, and that they didn't even want to engage with us further. Right. We're confident that the documents we saw were complete for what they were prepared for, which was so that someone could lend him money.
One of the examples you cite from the article, this is from 2015, Kushner took home $1.7 million in salary and investment gains, but those earnings were swamped by $8.3 million of losses, but significant depreciation losses. That's the interesting part. Most people think of a loss as actual money that they don't have. He was able to depreciate his income by far more than he earned.
Sure, it's a really big distinction, because Jared Kushner has a lot of money. He can rent an expensive house or buy an expensive car or whatever, and yet he's telling the IRS, I lost over $8 million in 2015.
All right. Thanks for your reporting on this. Emily Flitter is the New York Times banking reporter.